What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you're interested in, definitely stay tuned. Otherwise, you can support our channel if you like, share, comment down below. It helps our content get out to a wider audience, and we appreciate the support. So for today's video, we're going to be covering the topic of securities-based lines of credit, specifically stock-based lines of credit, which is one type of a securities-based line of credit. So we just recently did a video where we presented a scenario on how you can leverage a stock-based line of credit, not only to build credit, but also to tap into the liquidity of the stocks that you have invested in the market, as well as use those proceeds to invest in other cash flowing assets. So basically, a stock-based line of credit is a line of credit where you use your stocks as collateral for the line of credit, and institutions will give you anywhere from 50 to 75% loan to value. So if, let's say, you have a portfolio of 100,000 and the bank's offering 75%, then you can get a line of credit up to 75,000 in that particular situation. If they were offering 50% LTV, then it would be 50,000, assuming you have a $100,000 portfolio. Now, there are other types of loans like this. A lot of people may be familiar with, for example, a 401k loan. But in my opinion, a stock-based line of credit actually offers several advantages over a 401k loan. And one of the biggest ones, of course, is the aspect of building credit, right? And again, not every stock-based line of credit reports, but for ones that do, those help you build your credit because, for one, you're going to have a high limit primary bank issued account reporting on your credit. Number two, with a 401k loan, when you borrow from that 401k, that reduces the amount of money that you have invested in the market. So let's say you have a $20,000 401k and you want to borrow 10,000. So when you borrow 10,000, that reduces the amount that you have invested. So you're not fully invested while you have an outstanding loan with your 401k. Now, with a securities-based line of credit, you're still 100% invested, right? Your balance isn't changing, or rather, the amount you have invested doesn't change, right? It'll fluctuate based on the market, but you're still fully invested and you still have access to liquidity. So that offers much more flexibility, in my opinion, versus a 401k loan. So for today's video, we're going to be running through some of the different institutions that offer a securities-based line of credit. Usually you can go to one of the major brokerage firms, Charles Schwab, Raymond James, Fidelity, but there's also some other banks and credit unions that offer stock-based lines of credit. So let's go walk through some on the list. Okay, so here we have the Charles Schwab Bank Pledged Asset Line. This is a securities-based line of credit, and it's flexible, non-purpose. You could use it for a variety of different financial needs. Here they have listed, home purchase, new business startup, vacation, college tuition, renovations, etc. Now, the line amounts begin at $100,000 and a required minimum initial advance of $70,000. So you can't even go below that. Again, this is going to be for people with assets or stock portfolio in their Charles Schwab brokerage account of at least $100,000 or more. Right down below, it shows the interest rate spread dependent on the value of your portfolio at the time of origination. So if you have between 100,000 but less than 250,000, then you'd be paying a 4.5% on the pledged line. And you can see as the portfolio value increases, the interest rate spread decreases. So there's an inverse relationship. Overall, I would say these interest rate spreads are pretty competitive. You're not really going to find too many institutions with lower interest rate spreads. Again, you have to take in consideration the reason why these rates are so low, as you can see here, 1.75%, but they have a lien on 2.5 million of your assets in their brokerage accounts. So that's kind of, the trade-off. But I just wanted to show this as an example of a large brokerage that offers a securities-based line of credit. Let's go jump over now to some of the smaller institutions. So here we have, this is Baxter Credit Union. They offer stock secured loans and lines of credit. You can borrow up to 70% of the current market value of the stock, which is pretty decent. We'll go over some other ones. Let's now go check out First Tech. So First Tech also offers a stock secured line of credit. You could borrow between 25,000 up to $1 million, and interest rates as low as 9%. So that's pretty decent. Now, one of the things, I guess, trade-offs rather with First Tech is the fact that you can get in on the stock line of credit with a minimum of $50,000 invested versus larger brokerage firms where you have to have at least 100K. So you can get in the game with a lower amount. However, First Tech is only giving you, as I have highlighted here, 50% of the stock value. So that's one of the trade-offs. So you can get in, but the LTV is going to be much lower here with First Tech. Another way, if you want to leverage this to just build a relationship with First Tech, you can do that as well. So I just wanted to share that one. Next up, let's go check out. This is another broker, Raymond James, actually, and they also offer a securities-based line of credit. The minimum market value of 100,000 in your pledge account and a 55,000 minimum initial withdrawal. So this, I would say, is comparable to the Charles Schwab asset line, but it has a lower minimum initial withdrawal. So that's one benefit, I guess. If you didn't need to use 70K, you could just take 55. Next up, let's go to Fulton Bank. So Fulton Bank, this is a regional bank in like the Maryland, Virginia, West Virginia area. It's actually not too far from where I stay, but they also offer a line of credit based on the value, the current market value of the stock. So they offer LTV of 75%. So this is kind of in line with Baxter Credit Union. They also offer, I think, 70%. So you have here 75, 70% with Baxter, and then 50% with First Tech. So these are just some examples of securities-based lines of credit, specifically stock-based lines of credit. If there anyone out here who has any other financial institutions or know of any that offer stock-based lines of credit, definitely let us know in the comment section down below. And until next time, y'all take it easy, and we'll talk to you soon. Peace.